Hi everybody, welcome to Trendy Trading. My name is Jonathan. Let's go ahead and get started with this week's broad market analysis. We'll be going over the SPY, Qs, DIA, and IWM with an actionable plan. Remember, right there on YouTube at Trendy Trading, you can watch my quick video on how I trade the neutral strategy. I'll go over a little bit today. I'll try not to talk for too long, and let's just emphasize what happened this last week. Well, we got the flush flow that we were looking at. We came into an area of demand. As I spoke before, I showed you what a flush low looks like. This is exactly what happened. We took out anyone that was trying to put stops in there, and then all of a sudden we just push up, and you're left there wondering what just happened, right? Well, a flush low happened, and we have a nice inside candle. We'll get to that here in a second. Notice here on the left-hand side, we have the weekly. In the middle, we have the daily. And over here on the trading view, I got this nice clean setup so you can kind of see what's going on big picture. Okay? All right, so let's start over here on the left-hand side. Let's talk about the overall trend. It's extremely bearish, but we did get that nice stick, like we said last Friday, nice push up for the bulls. But the question is whether or not we can continue this cycle, and a lot of it, in my opinion, has to do with the dollar. The 10-year Treasury, we'll be taking a look at that and seeing if we can possibly continue 1 to 3 days for the bull side. Now, it's been a long time since we've seen any sort of continuous move up. And you can see that over here on the daily. It's just continuation to the downside, and now we're just kind of basing in that demand zone that we talked about before. Notice that we have the neutral strategy. They will be a tad bit wider. So what I'm saying is the overall risk, if I'm going in on a swing trade, is going to be a little bit wider than it typically would be. And the way that we look at that is this number subtracted by this number, 444 by 438 if I'm trying to go swing, meaning if price breaks above here and I want to take Friday options, then I will stay in that trade as long as price stays above this 438.63. All right. Now, intraday, all levels to the upside are resistance until proven otherwise. A couple things I want you to note is that we're starting to get back into the cloud. Remember, the cloud is our support when things are looking good, right? We just kind of come in, we dip, there's that support. Now, when we're under it, it becomes resistance. So notice here on the weekly, the SPY is inside the cloud. And when price is inside the cloud, I always say like it's turbulent. Just remember that. It's turbulent. It's still going to be volatile. I would be absolutely shocked if we just rolled into this week and there's no volatility. There's just no way with all the different macro events going on. So expect volatility. This is very, very important. We coached this from Monday's drop. All you had to do was take the low, take the high, and understand that most likely we're just going to be trading within that range and that it was going to be very volatile. And the easier trade, in my opinion, does not happen until we could break out of this box or below the box. Okay, so again, we're just basing in here. That's all that's happening or digesting after a big move back. Try to stay away from blogs or narratives or any of that jazz and just stick with technicals. Okay, price came into a trendy edge. This trendy edge was here last week and the week before and the week before, and we look for support when price comes into that, and you can see we did find support. Okay, that's technicals. Now this week, again, if the lows hold, then we are supported here. We are just basing in this area. If we break above this green level around 444, then we could see a nice push up. Notice as I zoom in here, you're going to see the rest of these EMAs. Okay, if price starts to move up, what I'll be looking for, first of all, if that happens, we have ourselves what's called an inside and up. So inside candle and then a nice push up, and you could see prices move towards these EMAs here, or you could just look at these targets over here to the right hand side. Okay, now in most cases that's going to be the story through the Qs, DIA, and IWM. So in a bullish cycle, we'd really like to see this 438.63 hold. Just remember that. I believe if this is going to continue to stay bullish for the next several days, then we will hold these levels by the end of the day. So Monday, if we open up, even if we open up down, I want to see this 438.63 hold. Okay. Over here on the right hand side, this is the daily. Notice we're getting very close to testing from under the cloud here. Okay, so here's the daily cloud. This is your first set of resistance, and you can see that that resistance happens inside of this neutral. So understand, this neutral area is a high probability area that is built off of Fibonacci's supply and demand, my scripts and so forth. And the higher probability is that it moves easier outside of this box. Okay, so inside here, it doesn't mean I can't trade, and I do sometimes like intraday trade, but the bigger picture again is that we could move a lot nicer. And if you think about it, let's zoom in one more time. If you think about it, if we get past this first area in this topping wick here over the neutral, then we've passed up two areas of strong resistance and we could move here freely, and that's why this neutral level should work very well for us. Okay. Now to the downside, if for some reason we start to break down below the 438.63, you do have the cloud here on the weekly, so left hand side here. The question is, do you stay inside the cloud? If we don't, we start to break down, look for these levels here, 435.24, 432.80, and so forth. Okay. Over here on your right hand side with the trading view, I want you to take a look at it. This is pretty straightforward. Last year was an amazing year. In hindsight, an easy year to stay above the cloud. Every time you came into the cloud, it was an opportunity to buy the dip. But in most cases, a lot of people last year were looking for an excuse to go short, and unfortunately, they just couldn't stay on the short side because it was a buying opportunity. This year, you know, we pull back into the cloud and all of a sudden things do not hold, and then we have a whole different, entirely different looking chart, right? We're like, wait a minute, this cloud did not hold. But the narrative, there's a lot of negative stuff out there, and really at the end of the day, technically speaking, we just flushed out a demand zone. Now we push back, we're back into the cloud, and guess what? It all happens right in time for earnings. You know, a lot of people are looking for Apple not to do so well, and then they surprise and they kick butt on Friday. We kick butt on Friday by trading it. And so that's why, for me, the technicals are very important to stick to and just pay attention to these levels that I'm talking about, okay? So overall, my sentiment here into SPY, we have some big names reporting out there. So, you know, you can go out here on Twitter. One of my favorite follows that I like to follow just to get this information is going to be, here, let me go ahead. Earning Whispers. So again, Earning Whispers at eWhispers. They give out what's coming up for the week, and you could see over here that they are going to be reporting big names. All right, and because of that, basically, I would expect some volatility, but I want to also keep in mind that most likely we'll be in a range. You know, until we start to see a little bit more from Amazon, AMD's out there. Like I said, several names. Okay, so we're just getting ready. Everyone's coming up to the starting line. We got a little bit of momentum on Friday, and now we want to see, does that gun go off? How will this run go? Will we continue 1 to 3 days? Again, typical cycle for the upside is about 1 to 3 days. Okay, so I'd like to see 3 days for the bulls. All right, let's go ahead and go into the Qs. All right, and we're going to change the 3 of these. All right, so starting with the left-hand side, it looks the same for the most part. However, we are underneath the cloud on the weekly, and over here on the daily, we're getting very close to testing that cloud from underneath. So again, resistance, and over here on the right-hand side, we'll get to that here in a second. So overall, you can see my banners up here. They're letting you know that the overall trend is bearish to neutral. And so we want to be careful here. This is the trajectory of this move down is pretty steep. So in my opinion, we could run really hard if we get the right sort of information from some of these earnings that will be coming out this week. I like the divergence. between supply and demand on this, meaning the bigger picture, we have a lot of supply up here. We're trying to build value in a demand zone in this area, and if we can do that, that's a lot of room that we can run to the upside. However, because of the recent pullback, we've also created a lot of selling pressure, and it's going to take a lot of confidence in the market and with the participants for this to move up. So expect more choppiness, more volatility, and once again, if we start to break over the neutral, you know what I want to do. If we start to break down below the neutral, then you know what I want to do. My overall sentiment here, especially on tech going into this week, big week for these guys. It's all about numbers and forecasts. We'll see what that looks like, and you got to have a plan. We'll be creating plans around what we see. All right. All right, over here on QQQ, right-hand side on TradingView, same thing, same story. We stayed above the cloud for a long time. Every time we came into that cloud, it was a buying opportunity. However, we pulled back. We flushed the inside and up zone that I had here, okay, and that's good. All right, this is what they don't teach you is, a lot of traders just try to go long in here. For me, I wait for a flush or a reclaim, and you can see they flushed it out. They try to pick it up. One tiny detail here, I want to zoom in. I want you to note that this is an inside candle. Price did close on the previous candle. So this is an inside candle. This could possibly be an inside and up, especially if things are looking good. It's looking pretty bullish as long as we can break over these neutral levels. Notice that the 356.95, this is important on this chart specifically. A lot of times I would have probably put the top of the neutral here at this topping wick. And don't forget, guys, there's a video out there on topping wicks. It's very, very important. I think I made like a 3 to 4 minute video. Watch it. It's at Trendy Trading on YouTube for free. This shows me that there's a lot of selling pressure in this area. So again, typically I would take this line and it would be up here. So just know that's the reason why if we break over this green line, my first target's pretty close. I would expect a little bit of resistance at this previous topping wick. All right. All right, let's go ahead and go into the diamonds or the Dow Jones here. So it's DIA. All right, same look here. All right, a little bit stronger though, and the reason why I say that is look how deep it got into the previous candle. All right, so again, inside candle, you got resistance above. You can see the different EMAs here. They're pretty much synergistically coming together with some of my previous or my future targets to the upside. Your support for this week, again, would like to see 344.11 hold. If not, then we're breaking back below the cloud, and you possibly could see 341.81. But again, with such big earnings coming up this week, folks, I just feel like this is going to be more of a shakeout. Everyone's on eggshells. They're looking for volatility. So any sort of volatility to the downside, I feel like there could be overreaction from people who are scared, who do not have a process. So again, very important to know what your levels are and what you're looking for as far as this candle to hold its support. Once again, we came down into a trendy edge. That thing worked like a charm. And here we are back in the cloud. Over here on the daily, maybe canary in the coal mine, right? Maybe. It came into this daily cloud, the only one so far out of the SPY and the Qs that I showed you, and it actually closed inside the cloud. All right, so remember, the SPY and the Qs are not there yet. All right, so canary in the coal mine, maybe, we don't know yet. But if they break above here, again, resistance to the upside. And here on the right-hand side, these are the same charts that I gave you last week on TradingView. And you can see we flushed the inside and up. That's exactly what we want to see because, again, guys, your traders, your newer traders, are some that just stick to this old school process. Is they try to go long and then they get flushed out. Again, I'm waiting for that, and we explained this very, very well in the last 2 broad market analysis for you to be prepared for this. So again, hats off to anybody that did well, being patient and waiting for this. Now it's whether or not this turns into an inside and up, or do we end up next Friday at an inside and down. So far, things are looking pretty good to the upside, at least for a couple of days. All right. So this is what I'm looking at on the DIA. The overall trend again is bearish as far as this year, and then looking at the entire trend, we're actually still bullish here. Um, Other than that, we have very nice range. We have some nice divergence. I want you to notice that we have this right here as supply, and this is possible demand here. So we are creating some nice range here into the next quarter. All right, so that's DIA. Let's go ahead and look at IWM. All right, IWM, the one that you want to work, but just never works, right? It just cannot pull through, and it makes sense from a macro standpoint. Technically, it keeps breaking down. You can see over here on the left-hand side, look at all this red, folks. There's nothing pretty about that. This guy can't be trusted for the most part. Nice pullback. However, what I like about this chart, and I can't help but to like it, so even though you can't trust it, you want to trust it like almost every single week. And the reason why I say that is look at the divergence. Like, it's just beautiful because you know, as a technical trader or just a trader in general, that if for some reason we start to go bid, buyers come in, IWM, starts to look good, we have a huge range that we could trade up to before we even start to think about resistance. All right, so again, on the weekly, looking very bearish, but we have a lot of divergence there. This is the neutral strategy. I'll stick to that. We are underneath the trendy edge. This is a really big deal, guys. So this area, notice that there's confluence here. So at the top of the neutral and the trendy edge, the lower edge here is supposed to be support until it's not. And see how it flushed it? We came back to the previous trendy edge. We used those as targets. And we pushed up, and really, if we can control and get above here, buyers can get above here and hold this at least 1 to 3 weeks, what we could be seeing is setting up for a really nice year to the upside, okay? Because all of a sudden, this is my curve. We're lower on the curve. I want to trade up to the higher end of the curve, and you can see right here, guys, inside and down. So there's some awesome confluence here with your trendy edges and the candle formations themselves. So again, I really like the idea of IWM coming back at some point. Again, I can't tell you if it's going to be this year, but what I can say is if this, then that. If price can start to build over the trendy edge and this neutral, things are looking great to the upside. I don't think it's going to be easy. I think it's easy for them to whip you out, and that's the truth. Okay. Over here on the right-hand side, this is IWM. I had some targets, came into those targets, and now, again, lots of divergence, a lot of room for it to run if it wants to, but at the end of the day, it's still underneath a lot of supply and resistance. Okay. All right, so I went on I talked about gold in the room, and actually I was live on Twitter, and I'm going to talk about it again because I think it's a great learning opportunity for anybody who follows big names out there on FinTwit. You guys know I'm big on staying away from gurus. There's a lot of them out there who are great at what we call hindsight. So they come in and they say something after the fact, but they're not actually good at trading. So we have a lot of good chartists out there who, I'll tip my hat to, but I would say 98% of those guys who are good at charting aren't actually good traders. And that's why they don't show you live brokerage alerts and so forth like we do here at Trendy Trading, because it really isn't much of a process. Their process is trying to basically give you some rose-colored glasses, as we like to say. There was a big name out there who put out gold and was talking it up. And anyone, and again, guys, this is not to make fun of anyone, but this is a great learning experience for you if you're taking the time to watch this. So you got this guy who, he's a pretty big follow. He's on TV. He's telling everybody, hey, this is a great chart, man. I stand behind this chart. And immediately I'm looking at it and thinking, like, you got to be kidding. Like, who in the world would say that? Seriously, if you've been trading for as long as you say you've been trading and you're a technical trader, then you would immediately recognize that price came into what we call an inside and down. Okay, so this candle right here is a down. This is your inside formation. And when price left here, Price then picked up at our trendy levels in this area and then pushed up. And as it gets to the inside and down, guess what? It rejects. The tweet came out as price was entering what we would call resistance. Now, the easiest way to approach this, if you got burned by this person, or maybe you just got burned trying to trade gold, is understanding that these topping wicks, once again, I'm going to tell you, watch my video on topping wicks. It's going to teach you a lot. These topping wicks are telling me immediately, be careful. There's a lot of selling pressure in here, and it's not to be trusted. The easier trade, okay, in my opinion, when it comes to this type of setup, is understanding that the overall trend, okay, is neutral to red. So it can't be trusted. It's definitely not bullish. All right. So trying to buy this to the upside just doesn't make sense unless you're trying to buy it lower on the curve, guys. So as price pulls back. So, I would much rather try to take a chance at gold if it came back down into 164.62. I'd much rather put like $2 of risk there and see if it actually finds buyers. Okay. That's the only time I'm interested. Or in the case that it can build value above this topping wicks and this inside and up. So all you have to do is just wait patiently and wait to see if we can get above there. You don't need to be a hero. You don't need to go for it. If you just study price action, you'll understand how important this valuable lesson is that I just taught you. All right, let's go ahead and move on. So some things that are going to be really important going into this week besides earnings is very much the TNX, okay, the 10-year Treasury, okay. Matter of fact, I'm going to open this up really quick so I can show you guys on a bigger screen. So we're going to go right here, the 10-year Treasury. Now, what do you want? So what do you want this to do? We're not trading this. We're using it as an instrument to help us to gauge our sentiment for the market. Okay, and this chart I put together several weeks ago, and what we want to see with the Treasury is you want it to settle down. It doesn't have to necessarily fall. It doesn't need to do. It just needs to settle down. All right, and it's a little crazy right now. The VIX is crazy, and so we put this resistance line up here. Notice that the Treasury is rejecting there, and that's what I want to see. So I want to see that the overall, that it could stay underneath this yellow line in order for bulls to have some sort of a fighting chance for a 2 to 3 day consecutive rally. Okay. So again, very, very important that you understand what this level is. If you want, you could come over here and say, okay, I want to be alerted on this if we break above that level. Just caution. Okay. All right. So the next thing that I use that's very important is going to be the dollar. All right. Now, a lot of times the dollar drops, the market goes up. Sometimes it's not like that. But the higher probability is when the dollar is bullish, the market kind of comes in, pulls back. Okay. Now over here we have a smaller time frame. It's smaller. It's a weekly. It's an inside and down. And notice that the bigger level of supply is up here. And then we created a little bit of support and demand down here in this green box. So this is the blueprint itself. Understand that we came right up into this inside and down. We rejected. Okay, so again, I need the Treasury to calm down, and I would like to see the dollar stay underneath this yellow line. Okay, so I'm going to go just above the yellow line, and I'm going to add an alert here for the dollar, because I know if I'm sitting here and hanging out and my TNX goes off and my dollar goes off and the market's starting to pull back and the VIX is starting to spike, then I know to lay off the longs or just to be very cautious and bring my stops up if I'm profitable on my longs. Okay. All right. So the next thing we're going to do is look at the skew. All right, the skew again, hedge funds, what are they looking at? Are they expecting a two standard deviation in the market and so forth? Just because I haven't explained this in the past to most of you, our members obviously know this, but if you were to put a SPY chart behind here, as the skew is dropping, basically what's happening in the background is that you have the SPY dropping. Okay, so here we want to be really careful Okay, and I want to start thinking about longs when the skew is dropping into this area, and that's why it's called risk on. All right, basically, for me to explain this to you is that everything's happening, right? The market's been going down, the market's dropping very hard. The news and the narrative out there is all negative. The whole world's coming to an end, and yet this right here has always been a very good indicator to understand the sentiment of the market and how retail is really not, and they do not have an edge. It's the bigger money. And when you start to put all this together, it starts to make more sense to you as you understand we're coming into demand. The narratives, the news, all of them is just this one big group that is trying to scare retail. And the better way to look at this is you want to be buying at support levels and not necessarily trying to speculate. And that's why we put all this together. And we need all these to line up. It's just like Mark Douglas said, right, guys? So what we're waiting for is we are waiting for our 777 to line up, okay? And then we put our money in. The difference between gambling and what we do here on a technical basis is we don't put our money in until the sevens line up. When you go to a casino, you put your money in and you wait for the sevens to line up, and if they don't line up, you don't get paid. That's just how it is, right? So that's what's going on here. We're waiting for all these things to line up on the sevens. So the dollar, the skew, the treasury, the P call. Okay, all of those are very, very important to us. Let's go ahead and take a look at the VIX really quick. Again, it's up to you what you want to do. But basically, this tells me there's pressure here. The VIX may be coming in just a little bit. It's important to recognize that. I would like to see the VIX kind of creep down just like the dollar, just like the Treasury. We'd really like to start seeing this thing get under 22.21. Now, I want to say something before we end this session. It's very important to recognize when volatility starts coming out of the market, guys. Because what happens is that you'll have some winners out there, meaning individual people, rooms, it doesn't matter. But you're used to volatility, and you could come in the morning and just say, hey man, I'm going to buy $6 to $8 out of the money on these spies, just giving you an example, or Amazon, whatever. And it works, and you're like, holy cow, man, these were only 10 cents and they went to $7, right? Well, guess what? When the volatility runs out and they are forecasting this, it's really easy for them to attach the premium. So you buy something super expensive, then the VIX starts to drop, the volatility starts to drop, the implied volatility, there's less percentage there, and all of a sudden you're not moving as fast as you used to. And guess what, guys? Your premium gets burned, you get smashed. So be very, very careful. Keep note of the volatility. Yes, we're having some fun with the volatility, but it doesn't always stay for too long. So try to be on the up and up. Pay attention to all this stuff. If you guys have any questions, reach out to me. I'll try my best to help you out. Don't forget, we have amazing deals, 50% off on the trial. It gives you 7 full days. You get to hear me. You get to see my techniques. You get to see my live brokerage trades that are sent to our room in milliseconds. And again, those are for proof of concept, okay? That's to show you that I put my money where my mouth is and I take the trades that I say I'm going to take. I really appreciate everybody. I can't wait to trade with you this week. We'll probably go live a couple times on Twitter. And if you tried to watch us last week, we had some internet issues here on the East Coast. And so that definitely gave us a little hiccup there, and I apologize. But nonetheless, check us out at trendytrading.co. Check me out at Twitter at TrendyJohn, TR3NDYJON. And again, if you have any questions, please reach out. Good luck to everybody. I hope you do very well, and thank you so much.